Hey, everybody. It's Arlissa, educator to trader. And if you're an SPX trader like me, FOMC days can feel very intimidating. You've probably seen the market move like 50 points, 75 points, or even 100 points in a few minutes after the announcement. Usually it comes around 2 o'clock, 2:30, and the market just makes this wild move. For many traders, this volatility really can create opportunity. Now, me on the other hand, I'm usually like, I don't want no parts of it because as a seller, that extra movement there is not something that we want. And many people suffer losses. All right. Today, I want to share how I approach FOMC days as a credit spread seller and why my goal isn't to predict the announcement. I'm not trying to figure out what's going to be said and what's going to happen afterwards. It is to survive it and to profit from the reaction. All right. The biggest mistake that traders make is on FOMC days, they're trying to predict what the market is going to do. They decide beforehand, oh, I think it's going to go up. Oh, I think it's going to go down. And then they place trades before the announcement, hoping they're right. The problem is that in this market, it often reacts different than you expected. Y'all have seen how the market been acting. You acting different. Sometimes the initial move reverses. A big pop, then it drops. A big drop, then it runs up. And both sides get trapped. That's the whole goal of the market, is to separate you from your cash. Don't you know that? That's what they're trying to do. Where you think everybody's in calls, let me jump in some too, and they drop it. And you're just like, what? As a seller, I'm not trying to be the hero. All right. I'm not trying to be first to the party. I'm not trying to guess right. Nope, nope, nope. I need to be a professional. I'm going to utilize the opportunity in order to capitalize and pull some profits off of it. Basically, there's a whole, the IV is elevated, and that really means that premiums are going to be elevated, which is great for me as a seller. Listen, if I'm taking in premium, I'm selling premium. I want to take in as high a premium as possible, but I'm not trying to get my trade blown through just because I'm getting higher premiums too. Okay. So here's the rule. Here's the rule. Everybody listening, listen closely, listen closely, listen closely. The rule is you want to trade the reaction, not trade the announcement. If you want to trade in the morning leading up to the announcement, that's good. Be gone though by 1:30, 30 minutes to an hour before the announcement. You want your trades closed. And then you wait and see till after the market has done or the announcement is made, after it just shows its hand, and then you ride the wave. We ride the wave into the close. So from 3 o'clock into 4, again, premiums are very elevated. So we want to get into the trade, but we want to get in the safe place. Okay. I don't feel the need to jump in immediately after the announcement is made. Basically, from 2 to 2:30, I'm chilling. I just said that, and I'm just watching, gathering information, letting the market show us what it wants to do. What I'm looking for is, are buyers in control? Are sellers in control? Did the bull show up? Did the bear show up? Is price holding above VWAP, below VWAP? Is price rejecting a key support or a resistance? Is the move sustained or is it already reversing? Was there a pop and then a huge wick? Either way, or a drop and a huge wick. What are we doing? What are we doing? Once I can answer these questions, I can begin looking for a high probability setup and not before that. We're not in any rush. I'm not trying to be first to the party, like I said. I'm just trying to come in, pick up a few crumbs on the way, get me some coins on the way into the close. Okay. Why does this matter for credit spread sellers? As credit spread sellers, we don't get paid for the excitement and for all the extra volatility. We don't get paid for that. We get paid for probability. I want a higher probability trade that says there's an 85% chance my trade is going to be successful, 90% chance my trade is going to be successful. The announcement period often creates the worst combinations possible. You got high volatility, wide option spreads, fast moving price action, unpredictable direction. That's not the environment I'm trying to be in to force my trades. That's an environment where I want to protect my capital. Few things you can do too. You can bring your size way down. Where if normally if you trade multiple contracts, maybe you trade one or two. And then you go wider spread. You go further away from price because you can still get good premiums further away. And you might widen your spread. Instead of doing a 5 spread, maybe you do a 10 spread, 15 spread. And listen, if all else fails, cash is a position. Sometimes the best trade is just none. You can just sit and don't trade anything. All right. So here's my FOMC trading plan. Here we go. We got some steps here to the FOMC trading plan. Step 1. This is a simple plan. Very, very simple. Step 1. We're going to respect the announcement. From 2 to 2:30, 2:45, we're not doing anything. Announcement happens at 2. Press conference starts about 2:30. So you're giving some space there. Usually at 2 o'clock, something violent happens, right? And you don't want to be in the middle of that. Step 2. I'm avoiding predicting. I'm not predicting what's going to happen. I'm just waiting to see. I'm watching. Step 3, wait for the volatility to settle down from some. SPX is going to reveal you a direction. It's going to tell you which way it's going. Step 5, trade only if you see a clear setup. If you don't see a clear entry, what we would normally do for an entry, if you don't see that, then you just don't trade. All right. If no setup appears, no setup appears. No trading is a valid trade. If you do see a good trade, take it. Take it. Just know you're in a higher volatility environment, right? And things are going to be going fast. So you can definitely watch, or you can decide you're going to jump in. Just be light and be wide. Be light, be wide. Be light and be wide. Okay? So in closing, first of all, I want you to make sure that you like and subscribe. Do all the stuff you're supposed to do on YouTube. Like, subscribe, hit all the notification bells, all the good stuff, right? Do all that. One of the biggest lessons I've learned as an income trader is that I don't have to trade every opportunity. I don't have to be in the market every day. I don't have to trade every event. I don't even have to do that. You could take, Wednesday, you could take Wednesday off and just chill out. You can take Wednesday afternoon off and just make your money in the morning and don't even trade in the afternoon at all. Okay. I only need to trade the opportunities that fit my process and fit my purpose. My purpose is to bring in capital. If a trade does not, if I think it's too risky, it's going to be too much, then I don't have to. I can get my money in the morning and be gone. On FOMC days, patience is often the edge, right? Patience or just chill out. Chill out. Go enjoy some sun. Go touch grass, as they say. Remember, we don't get paid for being first. We get paid for being right. We're going to trade the reaction and not trade the announcement. All right? Hey, like, subscribe, all that good stuff. And I want you to stay green and get this money. All right. Bye.